We're live, Lauren. We're live.
Hey
Hi,
Beth, how are you?
I'm awesome. How are you doing?
I'm good. I'm
So I,
good.
so I saw you just a couple of months ago. You were on stage at the Investor Summit. Yes.
Yes, yes,
How
yes.
did you have
Actually,
fun?
I had so much fun. It was like what, 6 weeks ago, I guess, about
March,
middle of March.
April, May. Yeah. About 6 weeks
Crazy,
ago.
yeah, crazy timeline. No, it was fantastic. I have been telling people like you should really go to this event because I mean, this will resonate with a lot of people. I mean, it's hard, especially for, I guess I shouldn't say any mom, but like a lot of times, especially if you're a mom, like the whole leaving the house and just getting out to go somewhere, it's just a whole task. And so you definitely can get to the point in almost any trip I ever take where I'm like, why did I say yes? I don't even want to go. And then when I got there, I was like, oh my gosh, I'm so glad I came. This is so worth it. Totally worth it. Can't wait to go back next year.
Yeah, and
It was great.
but that is so true, right? Like I remember being a single mom of two little boys, and exactly I felt the same thing. Like, why did I say yes? I don't even want to be leaving the house. And then sometimes the events I went to were great, and sometimes they were like, oh, I shouldn't have gone. But that's what I think in my mind, being a single mom and just understanding being a mom and or having a spouse that's busy or military or not having extended family to help, that boy, we better put on a good show so that moms and women feel like it was worth the time and the
Right.
commitment and the travel. So yeah, so we strive to make it better every year. So hopefully next
Oh, well, I
year
think
it'll
you
be
guys did a
fun.
fantastic job. Yep,
Awesome.
it's great. It's a great event, a great event. So
Well,
it's a
I
lot of
love.
fun, and I met some great people too. Like, in fact, I just I've taken a few good phone calls with people I hadn't even had a chance to really meet at the event because there's so many people, and reached out and just wanted to connect, and it's just so fun.
And you got to talk about, it was very funny because I guess the speakers for you were showing these beautiful pictures, and then you get it goes, okay, in self-storage and industrial, right? Self-storage or yeah,
Yep,
and then
metal
and then
buildings.
and you got ugly buildings, which were great, and then you dropped the bomb about, if you have a cost, buy the cost, which we'll talk about
Yeah,
on this show, but. Okay, so first of all, before we get going, and you're going to do something we have never done on Women Investor Wednesday, which is you're going to show some spreadsheets, my favorite word.
I
So,
am.
and
Yes.
underwriting, very exciting. But before we get to that, in case, there's obviously lots of people that watch this show that didn't come to the event, they didn't see you on stage. So, and maybe they're not on Twitter because Lauren's on Twitter. That's how I met
Hmm.
Lauren, through a Twitter meetup in Fort Worth, right?
Hmm. Yep. Yep.
That's when we met in real, what they call it, in real life. That's
IRL. Yeah.
yeah, IRL. So tell the audience who you are, where you live, what you do, like a little quick intro.
Sure. Okay, I'll do a super fast. So I live in North Carolina. I am married to someone in the military, so we've been stationed here for a few years. We've bounced around a lot. We've lived many places in the country. We've lived out of the country. I kind of got my start in real estate by buying where we would live, and then we would just keep it and we would rent it out. And I self-managed from afar, and I just started very, very small snowball. I had some relatives that did some of that, so I sort of knew the idea and the concept, but tried to sort of take it. The whole idea of managing from afar was very foreign to people, but I figured it could be done with modern technology. Have a decent background in just doing a lot of web and marketing stuff too, so it kind of just all came together. I have 4 kids who are currently, let's see, junior, freshman, 8th grade, and then 4th grade. So very busy. And then about it's 2020 into 2021, I just was like, I really want to get on the commercial side so bad. I knew I wanted to do it. I couldn't quite figure it out. I don't even remember how. Ended up on Twitter for a completely different reason. Kind of came across just sort of this commercial real estate Twitter world. And my eyes were just open to like, okay, this is how I do it. And self-storage really appealed to me because there was just certain things I liked about it. You could buy it and you wouldn't lose just a tenant and all of a sudden be everything's vacant. It just sort of spread the risk to me. You could operate it remotely, which was something that I was like, okay, I've kind of done that in the past. Like maybe I could take that. So I just kind of ran with it, and we ended up selling anything that was residential, other than our primary residence, and 1031 some of that stuff into storage, or just bought storage, and I kind of been doing it since. And I would love to buy more storage. It's a little bit hard right now, but so I got a bug in front of me. And then industrial, I'm looking at industrial. I think they're kind of cousins. So anything that's kind of a metal box that fits the tenet of, anyone from a single customer down to like a small business is all within interest to me. So yeah, it's been a fun journey.
How did you find your first self-storage was your entree into commercial? How did you find your first self-storage deal?
I was super fortunate that I think I hit it right before things went really crazy. And there was someone local to here that had wanted, it was actually on market. It's the only on market deal I've ended up buying. And, he wanted what turns out to be, now was a great price. He wanted a fair price for it. It's funny because he's a friend of mine now, and he is so hard-nosed about selling real estate. So I think when he realized how much I ended up selling that one 4 years later, he was a little irritated, but yeah, so I bought it from him. It was kind of a difficult purchase for me, because first purchases are always hard in commercial. You don't have any lender relationships. You just haven't proven yourself at all. This idea that you're going to come in and raise the rents, people are kind of like, oh, how do you think you'll do that? And the idea of operating it remotely is pretty foreign, especially I live in a fairly small town. So anyway,
I'm coming, right? I'm coming.
I know. I was just thinking about you the other day, as everything has been ramping up for the open. So I was
Lauren,
like, oh, it's going to come down.
So Lauren lives where the U.S. Open is going to be in June, and and I actually ended up getting accommodations in Pinehurst.
You did? Oh, good. Because I was actually thinking, I had a friend the other day, was like, we might leave town. And I was like, oh, really? Tell me if you do. So
no, yeah.
I well, that is good to hear.
Yes, I'm very grateful, and not at the whopping prices that, so hopefully we can see each other when I'm in town.
Yeah, that'd be great. I think I should be here. So that is my plan.
You mean you're not one of the ones leaving town? They're all leaving town. Many people are leaving town.
Yeah, many people are leaving town. I was actually thinking of taking my kids to my mother-in-law's, and maybe I would stay in town. So
there you go. There you go.
Yeah. So yeah, we live in a small area, and not to go too far down this rabbit hole, but just to encourage people, like, don't give up. If a lender tells you no, shop for a new lender. Get creative. I ended up, at first I was going to use the SBA, which I'm really actually thankful we didn't end up using. So I was searching for something conventional.
How would you have used that for self-storage?
The SBA will give you a self-storage loan for it because they consider a business.
Really?
Yeah. They'll do a 7A.
We didn't talk about that on stage.
We did not. No, we should dig into it. And I actually, I'm not even, like I said, super well versed in it, because I've really never gone down the SBA road, because it is pretty difficult to meet a lot of their requirements.
For sure.
But it can be a great option for, a lot of people, to include us. It would have been, I would have gone with it, except that the seller refused to turn over his tax returns, which they require. And he's just I love him, but he's just a grumpy old man, and he just wasn't going to do it. And so I did convince him to do a seller's note and allow me to get the price down where the bank was feeling comfortable with what they would lend. And then he did the rest.
Okay,
and
good.
I did make good on his note pretty quickly. So he was happy with it, but it took some convincing, because, my broker at the time, and I've not always used brokers, but my broker at that time, this is a small town, and he's like, you're not going to get John to give you a note. I've known that man a long time. He's like, he's not going to write you a note. And I said, okay, we'll see. Never say never.
Never say never. Okay. So I know we're going to get to the underwriting, but tell the audience, what's your portfolio look like today?
So that first place I ended up selling, which, it was always a hard decision, but I think sometimes you got to take some chips off the table and take advantage of it when it's booming. And I knew, I'd get that equity out and try to do something decent with it. And then I went and bought another place And then some of that place we actually sold off to North Carolina DOT in an eminent domain deal, which we did pretty well on. And then I also have another one that's close to me, smaller place with a back acre that we're, fingers crossed, about to put a industrial building on. And then we've got another one that is, oh my gosh, about 150 units plus 2 acres to expand on. So small. I have a very small portfolio by many standards, but
But but that is what this show is all about, is because I'm trying to let people understand it just starts with one. And then you wake up a few years later and now you have 5 and you're developing and you're buying a truck company, a dumpster company. So tell them about that real quick.
Well, yeah, so that's one of everybody's favorites. That was a popular one at the conference. So, one thing about real estate is it is a cash flow business to a degree, but and storage is for sure. But I was like, I'd like something that's more of a true service business, just because then you can say, like, this is kind of my cash flow. Let me put it back into real estate. Real estate's great, but you're still paying down a lot of debt, and a lot of your value comes in just time, right? Time that you've paid down that debt. So one of my line items is, in fact, getting rid of stuff that, especially if we buy a new place or if somebody is a hoarder and we can't sell their stuff in an auction. So these roll-off dumpsters were there, and I was like, well, these are very cool. So, I thought, well, if I'm paying for it, I should maybe own it. So then it becomes a profit line on another company that I own. So I did do a good bit of research. It wasn't like a totally impulse move, but I fairly quickly decided that, it's equipment. So the worst of the worst is, you sell it off if it just doesn't go well. And even if you take a small loss, you learn some things, right? So I bought a F650 hook lift truck and 8 dumpsters, and I got 5 more coming now because we had a really great month in April, and I think I'm seeing a lot of momentum. So
that's great.
It's been fun. Yeah.
That,
and, you have to.
That was so much fun at the conference when you.
Yeah, and I think you have to look too about, like, what are the similarities in your business? Because shiny object syndrome is a real problem for any entrepreneur. There's like always a new fun thing to get excited about. But I was like, okay, so, I have to really be sure that I'm not just getting attracted to something that's fun for the moment. But we have some great shared service model there too, which, if I was building to sell, you might argue that's not always the best option. But, my operations team, I'm training them to answer the phones, run the software, do the follow-up invoices, because for the storage and, they can handle all that. Like, it's doable by them. And, the marketing is really similar, and you have overlap with the type of businesses that you end up, developing relationships with. So to me, it just kind of made sense.
Do you mind if I ask how old you are?
I am 43. I was born in 81, so 43.
Yeah, 43 years old, not 63, with 4 kids. So again, what you're doing, I think, is amazing, Lauren.
Well, thank you. I appreciate that.
Happy we met, because I'm learning from you. I think what you're doing is brilliant with the trucks. Okay, so let's jump in, because when you said, I think we should do this, I'm like, yes, we haven't never done this before. So we're going to, hopefully technology, we're going to be able to figure this out. So you ready to pull up your screen?
Yeah, let me present. So this was kind of, after being at Beth's conference, I enjoyed, I got to do one of her breakout rooms, which was so fun. And I really enjoyed talking through some underwriting stuff, and I had a lot of questions about it. And I thought, oh, this might be for people that are really interested. This is kind of where you start the rubber meets the road on trying to understand all of it.
So we have comments. Natasha's like, I love this so much. And Veronica said, Lauren is amazing.
I love it. Hi, Natasha. Okay, so what I'm going to do, I have to flip. I don't have my big screen with me. So hopefully when I flip off myself here, I stay on here. So hopefully this is probably, I will go too fast, and it will probably be a little bit too broad brushstrokes, but I welcome anybody to reach out to me and ask questions and challenge me on something you think should be looked at differently. I'm also always learning. So, I'm open to anything. All right. And Beth, just interrupt me when you want, because I can no longer see you. So What I thought when I was thinking about this earlier today, so I'm now looking at my notes on my phone. So I think it's important to know, like, people model in different ways. Like, I used to think it was just such a black and white, like, science, but I've learned there's a lot more art to it. And the art is what can get people in trouble.
Mhm.
But the I think there's, people build different models in different ways, and they can get super complex. Some people just really, really, really love Excel. I do not love it that much. I like things to be like really simple, although this may not look simple at this moment. But the thing that struck me, and this is what happened when I got on Twitter, and I actually have to kind of give a shout out to Nick Huber on this one, because he was always very open about sharing a lot of his spreadsheets, especially many years ago. And I would take like a screenshot or download it, and then what I was trying to do is I would rebuild, because I knew nothing about this. I was like completely clueless. And so I would rebuild the spreadsheet in Google Sheets and try to like figure out, like, how did you get that number, and what's like, so it's understanding the relationships. So I
Right.
say to anyone who's like looking at underwriting, whether you're going to invest or buy or whatever, like, you need to understand the relationships between those numbers,
Right.
because that's really where it all comes together. So it could take a long time to really, really, really go through all this. But what this is it is a property that I recently looked at buying, and they wanted 2.75 million for it. And the property itself, it's a self-storage. It doesn't really matter a ton, other than the fact it was a value add. So there was definitely potential there. But 2.75, as it turns out, and we'll kind of walk through this, is a lot in my opinion. And I did not offer that. But apparently that's what it's going to sell for. So it's a whole
Mm.
other story.
Yeah.
Um, but let's start with, and interrupt me anytime you want, Beth, because there's a lot to go
I will.
through on this.
And
But
I'm using my cursor. So like right now, for those of you watching, I'm circling at the top the 2.75. And as she's talking about the numbers, I will try to put my cursor over what
okay,
Lauren is.
and I'll try to. I think if
Oh,
I
you
move my
got it.
cursor,
Yeah. Okay.
you
That's
can see
better.
that.
Yeah.
Okay,
Yeah.
hopefully that will work. All right, so this was like the purchase price here, and again, this is a model that I built. Everybody has a different one. You will see it done really differently all over. So let's talk assumptions. So assumptions are basically, I mean, this is kind of the story that you're going to tell with your model. So assumptions are what rents are, what rents can be. So that's, what are you going to model for the rents to grow? Initially, if it's a value add, maybe you grow a lot. If you're in multifamily, you talk a lot more about heavy capex, perhaps.
Mhm.
I have capex down here, not as heavy because this place didn't need anything crazy.
Mhm.
But it really varies, of course, from asset to asset, like what you put in there.
Right.
And then the other types of assumptions is, how much vacancies are going to be. So like I have my vacancy line here, and I'll go a little bit more line by line, but just to
Mhm.
make sure we're covered on what assumptions are.
Mhm.
What expense ratio are you going to run? What do you think your debt will look like? Do you think you can refinance? Are you going to exit in 5 years or 10 years or hold it forever? So all of those things, as a person that's modeling, you have to like make a decision on what you're going to put in those number columns.
Mhm.
And people can really cheat themselves or potentially their investors if they're not, like, first of all, honest. But it goes beyond honesty. Sometimes it's just it pays to be a little pessimistic sometimes, I think, rather than too optimistic. I think
Right.
optimism is great, but in underwriting, you got to be careful about being
Yeah,
too
the more
optimistic.
conservative, the better, right?
Yes, the more conservative, the better.
Yeah.
Because if you can make the numbers work at very conservative, then awesome. And you may have to say, like, okay, what's reasonable? Okay, still feel good about that. But yeah, this is where people can get tripped up. So I'm just going to go kind of by the line, and I'm
Mhm.
sure I'll bounce around, and I will probably confuse people. But I'm open to, people contact me with questions. Let me know. So um, this rent growth up here, you'll see this is kind of me modeling, hey, how much could we raise the rent in future years? So that's kind of like that line. The gross rent revenue is going to be, okay, once we push these rents up, here's our number. Now, I model where I put it in a separate tab. And whenever I do this, I put in like current stuff, current rents, and then I do a bear, which is like, hey, like, this didn't go super well. We weren't really We barely nudge this up at all. And then I do a base, which is like a solid, this is still a good decision. This is very realistic. And then I do a bear, and that's, I'm sorry, a bull. And then that's
Well,
like, this would be awesome if we got this type thing.
I
And I
like that.
always build that
I like
out.
the
Yeah.
bear, the base, and the bull.
Yeah. Yeah. To kind of, just because it is hard. I mean, that's where people get really messed up, was what they think they can rent something for, and then they can't, and then they're in trouble.
Yeah.
So in this particular location, I know it very, very well, and I own several other places very close to it. So I felt very good about like these base numbers being really solid.
Mhm.
So I use that in the model. So that's where this number comes from. Now, in this place, there was an apartment you could rent out, so we threw that in there. I didn't increase the rent all that much every year; it's pretty small.
Mhm.
The tenant insurance, which is something that we do in storage, where a percentage of tenants will pay a tenant protection policy. We put that as a line item on there. And then so then you end up with like a total revenue. There's other revenues that come in. I keep it pretty simple. I mean, there's all kinds of little things that sometimes add up, like late fees, and any of these asset classes have other things that could end up there. Um,
Yeah, but
I think
I also I don't model for those, right? Like,
yeah,
like
that's
Natasha, I sent Natasha a deal once, and the people had like modeled really high laundry income, and Natasha's like, you don't model that.
yeah. I just don't like think. Yeah, that's the only thing that comes close to that category is like sort of the tenant insurance. But because we have enough data to know kind of how many we tend to run, we're okay putting it into some degree. But yeah, you can really get messy with like too many of these extra. You don't. I mean, honestly, late fees sound great, but that just means that a tenant is not paying on time, and that's a whole other problem. Like, I don't want late fees. I just want them to pay.
Right. If you and
So
yeah, and yeah, and if you see a lot of late fees, that's a red flag. And then you better see some legal fees. And
yeah,
you
yeah,
usually don't
exactly.
see legal fees, you just see the late
Right.
fees.
Yeah. No, that's like a rabbit hole to go down. I'm not that complicated, so I definitely try to keep things more simple.
Yeah.
Um, So then we get to our vacancy rate. And this is, again, I think where a lot of people can be overly optimistic. So I know from experience that if you raise rents pretty rapidly, you probably are going to lose some long term legacy tenants,
Mhm.
to the tune of perhaps 30 to 40%. We did that not that long ago, and did in fact dip down to about 30%, which I had modeled 40. So I was still in my safe zone. But yeah, you have to model for that. And I'm guessing in multifamily, it's probably not that different. You have to really think of how much that's going to impact when you start raising your rents or need renovations done. And, there's carry costs there as well.
Mhm.
Um, so, and then, but then I do kind of taper down my vacancy rates a little bit over time. So assuming
Mhm.
with some stabilization that we can keep it at a decent rent rate. So,
And these
so then,
just for the audience, I
mhm,
just want to mention that these columns are annual. So like the first
yes.
column is what the current guys, the seller has, and then Lauren has for May 24, May 25, May 26. These columns are year to year. So in the first year, she says, okay, I'm going to raise the rents and my vacancy is going to go from 30. And then the next year she goes to 25 to 20 to
Mhm.
15. So these columns go by annual.
Yes, great point. Thank you for saying that. And sometimes I will actually model out month to month, especially in the first 3 years, or even in just the first year, if we're going to do like a big value add, so I can show potential investors like, hey, this is kind of what we're looking at for maybe the first 12 months or first 18 months or something like that.
Right.
But I would typically throw that on a different tab because it gets
Yeah.
so granular at that point. And
Yeah.
you are kind of guessing when you get to month because you just don't know.
Right.
So year to year is a little easier. So yeah, great point. So then, we take out our vacancy, we have effective, this is the effective potential revenue line. Um, for this storage, I have a 35%, which you can see over here, operating expense ratio. A really well done model has a totally different tab with the expenses broken out. So you can consider like taxes may go up, insurance may go up. Um, in this particular case, I just threw the 35% because I know it's a really solid ratio for this area. And I had already decided that I probably wasn't going to buy it. So I didn't need to get so granular with the expenses.
Mm-hmm.
So I'll kind of do that when I'm in, I guess, what I'd call like phase one of
Your
modeling,
underwriting.
and then
Yeah.
kind of pull it. Yeah. Kind of pull it in later if I need to get into all those things. Because that is, in fact, another place that people really mess up is what the taxes are now may not be your taxes after you purchase that place. They probably won't be.
Absolutely. Absolutely.
So we got to figure that out. And if you don't know how to figure that out, you can call the local tax office, ask them when they reassess what their tax percent is at the time, and you can try and assess where you think about that you'll land. Same thing with insurance,
Mm-hmm.
because those are two really big line items.
Yeah.
So then we have our net operating income. So this is a big number in real estate. This is basically saying, hey, before any debt or anything, this is kind of what the income is after we've operated the place. So ignoring the debt. And that number is very important because it's used with the cap rate is applied. So if you go to sell it and somebody says, well, we want to sell this at an 8 cap, it's going to be this NOI divided by the 8 cap. And that's going to be like the value that's been given.
Mm-hmm.
So whenever you can bring your NOI numbers up, this is a good thing. And then I have total capital expenses, which is just more putting money aside for future maintenance, et cetera. And then some cash flow after that. Now we get to the real heart of the issue is the bank debt. So what I modeled, and we can see over here, and I won't get so far into it, but I basically modeled that because the seller was in fact on this deal willing to do some financing. So I had put in that seller would do actually a big chunk of it. And then the bank would do a real small chunk because she was interested in that. So that is how I
So wait, so you said the seller would do $1 million at 5%.
I said the seller would do $1.5 million at 5%.
$1.5 million at 5%, and then the bank would do 1.2 at 7.5.
Yes.
Okay. Yep.
And so 7.5 is using, I probably, when I was messing with this, also bumped it up to 8 just because it could easily go to 8. I also didn't even know if the seller would do the 1.5. It was very, very wishy-washy with the broker. So, I was kind of saying if they could get, let's play with the numbers and see what could maybe work.
Which goes back, Lauren, to your original point for the audience is there could be 100 of these done.
Yeah.
With
totally.
all kinds of different assumptions from the rent,
it really,
to the vacancy, to the financing. And I do think that's when people look at these, they get, oh my gosh. But when you dive in and, you say, well, it all makes common sense. But when you're looking at a spreadsheet, like when you scroll down, I know some people's eyes went into the back of their head. So it's good that you scrolled back up.
Yeah, I know. And it's a lot to take in, which is why I always say, it's so hard. But when you start to play with the relationship between the numbers, all these numbers are related to each other and they equal this. And then down here, we're going to look at the debt and, that debt here, these two lines and these two cells actually came from this over here, where we broke down what the terms and the rate and everything was from. So it kind of helps you, where did that come from? So that was to me a lot of aha moments. But yeah, to your point, and that's kind of the rub on people. You can kind of financially engineer something that really is not a good idea, but you could maybe make it look good on paper if you find enough levers to pull on it.
And that is how people get in trouble. That's how people invest in bad deals, because it is very creative. People can really, you need to know what you're doing, or you need someone that knows what they're doing to help advise you by helping you look at the stuff.
Right. To really look at it. Cause even this, I was well, I was kind of trying to see if I could make these numbers work. Well, what if she actually gave me a 30-year AM on it, which is probably not, just to spread out the debt per month kind of. And even then it ends up not working, which is the part we're about to get to right here.
Yeah,
where
you're going to show us.
So basically, after this is what we owe in debt every year, this right here stands for debt service credit ratio, right? No, what does that stand for? It's debt service coverage ratio. Sorry.
Yeah.
And so basically what they're saying is like, hey, a one would be you basically broke even. If you're not reaching a one, like you have more debt than you're bringing in cash flow. And that's a real problem. So all this, not good.
Yeah.
So
Yeah.
um,
That's what
now,
she's showing is she's losing money every year because the rent and minus the expenses, minus the debt doesn't give her any positive cash flow at at the rent. So, and then, yeah, I'll shut up now.
yeah.
Sorry.
No, you're exactly right. So this is like negative leverage, right? So even though over here I could say, oh, but look, like you could make 2.5 on your equity here, like that alone, that little tiny fact, like that could look maybe okay on a nicely designed OM, but
Right.
you have to say, but over what period of time, which is where we get into IRRs, of course, and I'll get to that in just a second. But like, that's great if I can do 2.5 on my money, but not if we've just lost money this whole time. We had to basically pay in to make it flow. Like that doesn't work either. So this is, of course, at the point where I really didn't go so much further into this because I was like, nah, this number just does not work.
Now,
Somebody's going to buy it at that.
did you go back and say, I like it, but I can't buy it at this number. I'll buy it at the X
Mm-hmm.
number.
Yeah. So what I gave them was I actually even did it in almost a presentation format, which is a first for me. But because I'm so local to the area, I was trying to sort of pitch like I really get this area. I'm a local person. Like I kind of figured it wouldn't matter in the long run because a broker's job is to just get the best dollar. But I presented them three separate offers. One was like what I could afford at bank financing, which I think came down to 1.7. The second was like, well, what if we do some bank and some seller? And I think that's going to be the other tab I've got open, maybe like a 1.9. And then I was like, if you could do all seller financing with like really great terms, we could probably get to a 2.5. But like you'd have to have awesome terms. So
2.5
like
is
that.
really close to the 2.75.
Yeah, it is. But it was like this, all that bank, that just tells you how much that bank debt was messing me up.
Right.
Because it was like 7.5, or I think I also modeled it out at 8 at one point. So, and I don't remember, like I'd have to go back to what my offer was, but I may have even like had some amount down in there too, and so that probably helped the number too. Like I was going to bring in a certain amount of equity, and so that would have helped more. That's like a whole other conversation that does make a difference, is like how much are you going to bring to the deal, because that can improve numbers a lot. But it took me a long time to understand this, that like I like to be very conservative, which means I like to bring in a lot more and have less debt, but you won't have as good cash returns on it. So
Right.
the leverage is what makes it good. But again, like I challenge people to kind of model that out, because it's hard to understand until you actually put it on a piece of paper and go, oh, I see. The leverage is what can make it really good, but the leverage is what can make it really bad.
Right.
So
right. And can you imagine the years where people were giving 7 and 8 preferred returns to their partners and the debt was 3 or 4 or 5?
right.
And
Yep.
but there's people weren't getting that.
Yeah. No, it's crazy. I mean, it is really dangerous, and we're seeing some of this. I mean, some of the capital calls and stuff come in. So another thing, I just want to kind of focus on some of these return metrics, and I have this stuff down here. I'm not even going to get into right now for the weeds of the LP stuff. That's the limited partner capital. But so the going in cap rate would be like a 4.29 based off of that with the current revenue, which is here.
Right.
And then at 3 years, I've only gotten it up to 6.60, which is not great, particularly if my debt, even if I don't have full debt on this,
is at 8.
The bank debt's 7.5, yeah, or 8. And I didn't model refinance in this at all, only because I think over 10 years, you're going to refinance. But the refinance is another place you can like trip yourself up, because if you've convinced yourself you can refinance in 3 years and then you can't, well, that's not great either. So it's like, to me, it's got to work without the refinance. And then bonus if you can get in there and refinance it.
Absolutely.
Because that's another place. So this is another very controversial metric, I guess. The internal rate of return, which is basically saying that after this is done, if you were to sell it, then this is what your overall return is going to be. A lot of people don't like this metric because you are really at that point making yet another assumption, which is saying, hey, we're going to in 10 years from now exit and it's going to be this amount. So it's hard because people always look for it, but it is really tough because you just have no idea what that looks like in 5 or 10 years. Like, it's really tough to know where you're going to exit at. So again, being very conservative, using, a higher cap rate, like a 8.5 or 9 or something. If you're in an area where that's more appropriate, I'm in more rural areas, and then you see, 8.36, like, that's not that great over 10 years. Like, I don't, so even though it can look like, well, 2.5 on your equity, that's great, but you have to account for the time, over what period of time. And that's what the IRR is trying to do, is trying to account for over what period of time. So it is an important number. It's just a hard one because you're making such a big guess.
Absolutely.
Which is why one of my favorite people that I've learned a ton from on Twitter is Moses Kagan. And he is very, very, very interested in this number, which is an unlevered yield on cost, which is basically saying if you have no debt here at all, what do you yield from the overall cost of this? And then if it's not about 200 basis points above what you think you're going to get your debt for it on, then that's a concern too. So I know I'm throwing a lot of very complex relationships out.
Were you, what was your field of study before you got into this?
Well, I graduated with a media arts and design degrry.
So
but I've always loved business and numbers.
You did. I was going to say, you must have been a math nerd, because
I always say, like, this math is, like, luckily it's easy math, and I don't do public math. Like, if you ask me, like, for some fairly simple addition problem, I'd be like, let me write it down. So, but I think I love the relationship in the numbers. I think that's the part that's so interesting to me. And I really have to experience it to see it. So like I said, I would see these spreadsheets come up from some of my favorite Twitter people, and I'd be like, I don't understand that. Like, how did that, or what are they talking about? And then I would try and sort of figure it out through my own sitting in these spreadsheets and kind of modeling it out. I'm like very experiential. I have to really go through the process myself to really put it all together, which I think is what's so hard about explaining it to people, especially on a shorter call, to say, like, hey, this is kind of how this all works. It's a lot to take in.
But you've offered that if some of the ladies would like to reach out to you. So I think we should come back and drop off the spreadsheet for now, if we can.
Okay, cool.
I guess that's me.
Yeah, absolutely.
Am I supposed to do that?
I think you have to do it. Yeah, I know. And that was such a quick, I know that's like such a very, very, very rapid.
But it was amazing. Amazing, because, I mean, I was able to follow it. There we go. Live, people. So, yeah, and I want to see, I know I think we have some questions. Let's see. Show chat, exit full screen. Are you back?
Oh yeah, I'm on there. Okay.
Okay, great. Yeah. So you've invited some ladies that if they wanted to ask you some more questions, you'd be open to doing that, right?
100%. Yeah, absolutely.
And so you've decided you're not going to do this deal, but it might come back to you.
Yeah, you never know, right? It's really, really, really close to my house, and I will actually tell you where it is when we're not live, because you can drive by it when you're here. And it's and the one last thing I'll just get out with it, but it's like the one last thing, and I think this is super important when people are looking at the whole thing about investing, because I'm trying to be very encouraging investing, meaning like you should invest, but you'll feel so much better about it when you've really felt like you've looked at all the risks. And the other risk that is associated with this is it's right next to our regional airport, which is a very, very popular, big regional airport, because I'm in the Pinehurst area, one that they're trying desperately to expand and would love to make a longer runway. This is the one parcel that the county does not own. And to me, that's an eminent domain threat, which means if you purchase it, you have to purchase it at a price. So when the county comes in and says, this is what we're going to offer you, that you're not scared that like, oh shoot, this is way below what we paid for it. And because if you've ever gone through eminent domain, like they'll decide what the market value is and you can go sue them later, but it can take years. So now I've purchased something that gets bought by eminent domain. They're only going to give me what they think their market value is. And I've got to spend 2 years in court basically saying, well, no, that's not true. Because I mean, that's a sticky
That's a
situation.
huge
So
risk.
yeah, huge risk if you didn't buy it at the right price, right? Like if you get it on a steal, I mean, like I did do an eminent domain and it was a great price and we did really well in the turnaround on it. But you gotta get in there at that price.
And just so that I can let people know, eminent domain is when, like, if I owned a shopping center and if the Department of Transportation decides to make the 4-lane 8-lane and they need some of my property, they have to pay me for my property that they're taking to make the 8-lane road. But it has to be market. They can't just under buy,
Right.
but market is a subjective term.
Yes, and as anyone can probably guess, their version of market is the most conservative version of market. So you'll argue back and forth, and there's a whole process. My gosh, that could be a whole other video of like how that really goes. But yes, thank you for clarifying what that really is, because eminent domain is just one of these funny things in real estate that if you are around long enough, you'll probably experience it on some level.
Well, so if you had one piece of advice for the ladies that are watching that haven't started yet, what would your advice be? So there's a lot of ladies that watch that, like you, started with rentals and they have
Yep.
rentals and they're in residential and they're all like, we want to get into commercial. So what would be your advice?
I think for me at least, that being able to scale up to something that seemed less risky, and for me storage seemed less risky because like I said, there were so many tenants, I was like, surely they can't all move out, right? That just seems crazy. So that where did I see the most risk and how did I get myself to a place where I felt comfortable with it? So for a lot of people that own single family homes, getting to that quadplex, like, man, that's awesome because now you've gone sort of taken the next step into that. And it's amazing how many people I know that were like, well, I had this quadplex, but then I also bought like these 12 garden apartments. And then all of a sudden I own like 200 units. And it truly is this snowball effect. I mean, I hope to own a lot more storage one day and a lot more industrial square footage. But you just have to remind yourself, like, it's okay to just add the next step, like, and to not be discouraged by, because you can almost get discouraged by like, well, that person just owns all this stuff. I could never get to that point. But you can't, it's just, like somebody said the like little formula to me, which I don't know, if I'll stick to it this clearly, but it was like, buy 3 things, sell 2, keep the best, buy 3 things, and kind of keep doing that. And that number kind of ebbs and flow. But the idea being like, take some equity, purchase, sell some stuff, buy some more stuff, hold the best stuff.
That's
If you do
interesting.
that over time, it's probably going to work out for you. Okay.
Yeah, look, when I first started, my goal when I went on my own and said, okay, I'm going to be a GP and I'm going to sponsor my own stuff. I've done it 7 times with other people. I can do this a lot harder than I thought it would be. But my goal when I started was I'm going to buy 1 shopping center every 2 years.
I love it.
And I've been now gone or on my own for 20 years. I currently own 4, but I have sold 3 in the last 18 months. So I was up to 7. And I've had others that I've bought and sold and, been, so I think I think I did it. Now it's crazy how things come, I haven't bought anything. I mean, I'm investing in a partnership with one of my neighbors where I wanted to buy his deal and for 14 years wanted to buy his deal. And now I'm investing. Yeah. So I'm a partner. I'm up to, I think 17%. And in January, I'll be up to 23%, which is fabulous.
Yeah.
But except for that has been happening in the last 12 months. I hadn't bought anything since 2016, but I had bought something in 12 and 14 and 15 and 16, it's market driven, and now I've sold 3 things in the last, I think 15 months and it's market driven. When a 1031 guy shows up and wants to overpay,
Yeah.
Okay. But,
You have to say yes.
I just assumed I would always hold everything, but none of
Yeah.
it. y- y- each day is a new day, and markets change, and things change, and you get older, and you learn. And so, like I tell Natasha, I love giving her a check and getting a check, and I'm not doing any work. It's a great thing.
Yeah, that's always
So,
that's one way to do it too. And I think too, like I mean, I had that same mentality of like I just hold everything we ever buy. And luckily, I found some great mentors, and he was one that he was like, sometimes you probably should sell. And it kind of opened my eyes to like, yes, there's a bunch of equity locked up in there. It may not even be that good if I wait too long because of the sort of boom. Like I should take that and do something else with it. And,
yeah.
and I think that was really good advice at the time. And you'll never know, right? You can't know what you don't
You
know.
never
But
know. Look, I had a partner who, in, let's say, probably 3 years ago, had refinanced, paid prepayment loans, and fixed at like 3.7 on a deal that I'm a partner in, like fixed at a 3.75 rate, but paid probably $500,000 prepayment fee. And at the
yeah.
time, another one of my partners, he told that partner and said, hey, if you've got any debt coming, I think rates are going to go up. I'm going to pay the prepayment penalties and lock in these low rates. Like, how
Mhm.
can we not be locking in for 10 years,
Yeah, right,
3.75 interest? And
right.
my other partner didn't do it. Now he's got debt coming in the next 12 months. He wished he
That's a
would have,
lot. He
but
wished he would have
you
paid.
you you hear, like, I'm doing this, or I'm doing, and you, you hear so many things, and it makes what we do so interesting, because you're
Yep.
not really sure whose advice, or you have to go with your instincts and your knowledge and your wisdom, and you just make decisions. And like I said, I'm kind of shocked when I look back and think that I've sold, like, I had 7 centers and now I have 4, but they were all great. The timing was great on all 3, and I'm glad now that I've done it. But if you would have said to me 3 years ago, you're going to sell 3 of your 7 shopping centers, I'm like, I'm not
You'd be
doing
like,
that.
no, I'm not doing that.
So,
Yeah, you
but
got to
that's,
keep your mind open.
keep your mind open, listen to a lot of people, listen to,
Yeah.
read a lot. Twitter, I think Twitter's the most unbelievably educational platform for commercial real
It's
estate.
like a master's class, and you have to be careful not to get bogged down in some weird ugliness over there. But there's a couple people that wrote me after your conference saying, hey, who do you recommend? And I'm like, I can give you a handful of people that if you just deep dive their profile alone, you will learn a massive amount. I mean, Don, is great. I mean, he just delivers ton. I mean, you do, of course. There's just so much information really out there. You don't have to get this wide range of people, and then you kind of add more layers and more layers, and your educate. You're able to take in more because you understand it better. But I would just say, just for anyone out there that's investing, just start. Like just do something. And it's really tough right now. And I think it can be very frustrating. I had a call with someone from your conference actually that was like, man, I really so badly want to buy, but I just can't make sense of these numbers. And I said, don't do it. Don't do it because you just want to be in the game, because they really don't make sense.
Right.
But I encourage, like, look in a different area, look for a different asset class, try to figure out what might be different,
Well,
don't
yeah,
get too tunnel vision on one thing.
right. Like I said, I haven't bought a shopping center since 2016, but I've invested in 4 of Natasha's
That's
multifamily
just
deals.
deal. Yeah.
Right, because that makes sense to me. A, it's in my backyard. B, she has a
Hmm.
mission that I'm just embracing,
Natasha's
right?
awesome. Yep.
Right. And the numbers work and they make sense, and I can understand them. I mean,
Yep.
I have a lot of people that send me deals, and I don't, like, most of the time I don't understand, what are you talking about? Like, I go, by the way, like Warren Buffett he says, if you don't understand what you're investing in, you don't invest. And I have said
Yep.
that multiple times, like, I don't understand. And then they try to tell me, like, they try to explain it. I go, I'm sorry. It's got to be really easy for me. Like, I'm going to buy an apartment building. I'm going to fix it up. I'm going to raise the rents.
Yep.
And this is the market. I just heard, someone just told me in this area, where I live, that the rents in a project near my shopping centers are $4,500 a month. I had no idea the rents, the
Wow.
residential rents were that high.
Wow.
So yeah, but speaking of Warren Buffett, I'm checking off a bucket list item.
Ooh. Oh, you're going to go. That's right. I saw this. You're going to go to
I'm
Omaha.
going to
That's going to be amazing.
Omaha.
Have you listened to The Snowball yet?
No.
That's the book about, I think it's fairly new, but I do not quote me on that. It could be like 10 years old for right now. But it's his biography, memoir, or whatever. Anyway, it's very, very long. I've been listening to it on audiobook when I've been taking my walks. I mean, it literally starts from his very, very beginning.
Oh,
It's really good.
I'm gonna start it tomorrow on my walk, and I have that long flight to Omaha on
Yeah.
Friday. So maybe I'll get through, but I'm so excited. You know, Boomer lives in Omaha. Do you know Boomer from Twitter?
No,
Oh,
no.
so I think we're gonna, my girlfriend and I are going, it's been on my bucket. I'm so bummed I didn't go, last year when Charlie was still alive. So
Yeah, I
when
love
Charlie
No,
died,
this is
I said,
amazing.
that's it. I'm going next
I'm
year,
going.
no matter what.
Yeah.
So yeah, so I'm very
Yeah.
excited.
Well, and that's, I mean, to your point, basically, like I'm actually at the point in the book where Warren finally meets Ben Graham and like really starts to get educated with Ben Graham. And it's just really fascinating to hear him talk about how much his mind was opened to, stocks are not just like what the, I guess Ben Graham, always talk about Mr. Market, what the Mr. Market's mood is of the day. Like this is really about the value of the business. So, and that's always been Warren's thing, right? If I can't understand this, if I don't understand your business, then I just can't invest in it. And of course, he's made some decisions where some people are like, oh, that's so silly, he should have done it. But everything's like that in hindsight. So
Exactly.
yeah.
So, all right. So we're going to let everyone go to do their dinner or put their kids to bed. Lauren, what a great idea to bring up the spreadsheet. Let's do this
Yeah.
again.
It's a
Right?
tough one to do in such a short time. I'm happy to, like I said, field a phone call and kind of answer questions because I know that was something that was happening in my breakout, and I probably could have been a little bit more streamlined and a little more focused, but hopefully it was just enough to whet someone's palate. And there's actually, I'll give you a book to put in the recommendation. I think it's called. I'm not going to be able to remember it right now. It's at my office, but anyway, it's a really good book that's written for people who are looking to invest, but it breaks down kind of like the underwriting and how to look at it and stuff.
Oh.
And so that's kind of a good one. I think the author's name is Sean Cook, but now I can't remember the name of the actual book. And I use that too as a study guide. So it's not for everybody because not everybody loves to dig in like this. But if you are someone that kind of wants to understand those better and nerds out reading different OMs that come across and like to look at it all, then that might be for you.
Well, yeah, let me know and we'll put it out there. And thank you so much for your time. I'm excited that you'll be coming back next year. And
yes, I would love to come.
Yes, and we would love to have you. So thank you, Lauren. And if anyone, what's the best way for people to get in touch with you?
So I'm on Twitter at LC Rothlisberger, and that is definitely, you can DM me on there. And then also my email address is Lauren, Lauren, at, I'm going to spell it. It's Everettandharvey.com. And I knew that was going to be a really annoying.
Lauren at everettandharvey.com. I just posted that.
Yep. I know it's an annoying email address to have, but I wanted it, so that's what I did. So
what is Everett and Harvey? What's the significance?
So that's what the name of our operating company. So we operate everything out of like Serious Storage is the name of our storage, and Serious Removals are dumpsters. But the operating company is what everybody that falls underneath that, and that is my dad's middle name and my father-in-law, who I never met, who's passed away years ago. That is his middle name. And we kind of just like the idea of like, just trying to build something that is a legacy for our family and for the kids. And, maybe they'll be involved, maybe they won't, but, hopefully something that helps them take those big steps in life. And yeah, so that's kind of where that came from.
I knew when I saw it earlier, because I didn't know that before when I met you and when you were at the conference, but I saw that earlier on. I bet there's some significance to that.
Mm-hmm. Yeah, there is. Yeah. So it's just it's a good reminder of, why you do what you do.
Absolutely. Well, on that note, thank you, and go take care of those 4 kids. And did you, what was your advice? Did you give advice? Did I miss the advice?
Oh, I don't know. Did we talked about, yeah, I guess, no, did I said just get started. I think that's really, really simple, but It sounds so easy when you say it, but like find a way to take a step.
Yeah.
You know, but that's it. And don't get discouraged because this is a tough time to want to get started. So I think that's the other thing. But yeah, reach out if you have any questions. And I'd love to help anybody. A lot of people have mentored and helped me and been so generous with their time. So I'm happy to do the same.
Thank you, Lauren. Have a nice evening.
All right. Take care, Beth.
Bye.
Bye.